great to be back. Dilly, are you with us?
I am. The app crashed,
Yeah, it's
just as I was enjoying that
yeah,
song.
I know. It's just this app is so bad. I was going to do the space today in a different room in the house that I
Mhm.
normally do it from. The problem is, I'd say 40% of the time when I do the space from another room, the app crashes and the reception. I don't know what it is, but I tell you, I have like PTSD every time I come on this app. It's like something's going to go wrong.
Well, I think, like, the spaces have been, like, super glitchy, like, ever since they, started the new Grok thing,
Yep.
the little chatbot chick. So I don't know if that's, like, running on the same
Yeah,
stuff, but
I don't know what it is. It's just, but it's funny. I
Mhm.
mean, like you said the other day, like you and I have it down out to a science. It's like as soon as it crashes, we know to like start over and
Mhm.
reboot. But it's just, it's really comical. But you know what's really bizarre, Dilly? Why do you think there isn't another good platform out there that has this sort of interactive um
Social
capability?
audio.
Yeah, exactly. Because that's the one thing that keeps us coming back here all the time, dude.
It is. It's, like, the one thing.
Yeah.
If they didn't have social audio, I wouldn't be here.
No, neither would I. And I sent
Mm-mm.
out that tweet on late Friday where I had just had it. I said, I've had it with this, I've had it with that. I'm like inches away from quitting X and blah, blah, blah. And
I wanted to make fun of you
no,
because
no,
'cause I'm
that's
like,
it.
"You're never gonna
No,
leave."
no, I know, I know you, I know it's like you can't leave, right? But I was thinking,
It's the Hotel
I know,
California.
I know. But I was thinking about like, what is it about this app? And it's a community that we put that we build through the interaction, these
Mhm.
spaces. But otherwise, it's like all the furus and the fake avatars and the lying and the this and the that. I mean, I just I can't take it anymore. Seriously, I tweeted out something about it, I don't know, an hour ago. I went on a space, not a space. It was a broadcast. I'm not gonna say what it was. I don't want to embarrass the person, but it's a big name. You all know who it is, and I think I tweeted something out. I said, "What is it? GDP, blah blah blah, inflation, blah blah blah, the dollar, blah blah blah, asset prices, blah blah blah." I just sat there and listened to this word salad for like 45 minutes, and I'm like, I didn't hear a thing. And then finally, the host asked this person, "So what do you think about Bitcoin?" And they said, "Well, Bitcoin could be a good asset if people want to own an asset with more risk." And I was like, I mean, I fell asleep actually, Joey. It was that bad. I mean, I don't know. I don't know what the world's coming to. It's insane. It really is. So
Mhm. By the way, we need to schedule the space where you buy Bitcoin.
I know. I think, but
It's time.
it's time. But you know what?
Yeah.
But you know what? I've been doing you a favor by not buying it because it keeps going up.
I know you think it's gonna be the top, but I
I will
don't think
make.
it
Okay,
is.
you know
So
what? You
let's,
know
like,
what? You know
test
what? Just
the
to prove a
theory.
point. Just to prove a point. I will
Mhm.
buy. I will buy just to prove a point. And then, okay, so if I'm right and I make the top, what do I get?
Um,
Now, I mean, you may say, "Well, George, you're gonna get profits if you buy," but I'm telling you, if you
that's
bag
what I'm saying,
if you bag me
like,
in
you're gonna win.
if you bag me in Bitcoin, though, not good, Dilly, not good look.
Mm. I
uh,
don't think that's gonna happen, and I think you even know that's not gonna happen. You just don't wanna admit it, but
All right, we'll talk about more about this later. I don't want to
I
take it.
don't think we're here to talk about
No, we're
Bitcoin
not.
today.
Hey, we'll talk about it
Wait,
later.
the
In the
the
meantime,
taco trade.
oh, the taco trade, please. No, no, it's
Mhm.
not the taco trade. And we can talk about this with Jim. We'll get into it. And in fact, it'll be the opening provocation. I will try to trigger Jim with one of my usual outrageous intros. So anyway, Jim is no stranger to no favor. Jim is no stranger. Yeah, Jim is doing us no favors. No, Jim is no stranger to those of us in FinTwit and who watch media. He's always out there and he's always got a variant perception and always keeps it interesting. And he is not one of the blah, blah, blah crowd. So, Jim, welcome. Good to see you. Thanks for joining us.
And he's easy to trigger. So just let it rip. I'll go.
Oh, Jim, you want to get triggered. You came to the right place. Don't worry.
I always want to get
Yeah,
triggered. I've lived
so
my life angry.
so do I have to, I mean, do I got to read the intro, TGM Securities, blah blah blah. This is not financial advice, blah blah blah. You went to University of Illinois, blah blah blah. Let's just dispense all that nonsense, okay?
Yeah, yeah. I don't need to hear it.
Let's just get into it, all right? So
Amen.
let's just get into it. So Jim, what the hell is going on? Like, I look at the screens and like, I said something out the other day. People really like this one. It was one of the better tweets I put out recently. I put Tesla is a meme. The product is the stock. All right. And I just look at this whole market. It's like a giant pinball machine. And there's like no institutional memory from one day to the next. And everyone tries to ascribe reason why the market's doing this on one day, the other day. I just sit there and it's just number go up. There's tons of money around, and I don't know. I just scratched my head. So, Jim, I don't know if you have any strong convictions or can make any sense of this. So let's just get it going, and we can start a food fight here. So, Jim, welcome. The floor is yours.
Thank you. Well, you guys just mentioned Bitcoin, and I don't know if Bitcoin is a great asset to hold or not to hold. I started buying Bitcoin when that great Satan BlackRock started to get into the space too. So I figure if the most powerful institution in the world is getting into something, I should join it. I never bothered to actually figure out what it is because I don't care. Because what it is to me is it's an indication if there still is the liquidity trade going on. And a lot of people aren't talking about liquidity trade because everyone, a couple of years ago was talking about the 4.6% decline in M2 money supply. Nobody's really talking about the fact that now we've shot M2 money supply up to all-time highs. Nobody's really talking about the fact that the Fed was drawing down its balance sheet to the tune of $60 billion a month. That's dwindled to $5 billion a month, which essentially, if the market wasn't expecting and prepared for that, that's a de facto ease. Now you throw in the fact that the Fed is probably going to ease, throw in the fact that the government is still spending money like drunken sailors, even though they're pretending not to, and deregulating and lowering taxes, which, by the way, I'm for those things for the corporate sector, but it tends to be a pretty good environment for risk assets, which Bitcoin, by the way, certainly is. I mean, it is the highest level of risk asset. Now that we when we originally titled this, it was going to be the taco trade, which that was a week ago when that was the headline. When Trump always chickens out, and if that was going to paint him into a corner, and I don't necessarily believe it. I do think. Okay,
Hey,
I'm
hey,
going to throw something at
Jim. Now it comes back to me, okay? Because I know we had to cancel. I can't remember why we canceled it. Oh,
sure.
why did we cancel? I didn't even remember. There was some reason. I don't even remember. Maybe it was a big competing space, but we changed it. But no, Jim. Like one of the things that drives me batty is you get these little cutesy acronyms. The people say something in the street, and then one guy says it, the next guy says it, right? And then it takes on it's like it becomes like a truth we hold to be self-evident. So taco trade seemed to be this wise guy bullshit phrase, which I want to put my fist through the wall when it came out a few weeks ago. So I don't know that it was me, but I sure sounded good to me. I stole it from somebody. So this thing with the tariffs not coming back on, to hell with the taco trade. Hey Jim, how about the FAFO trade? FAFO. Okay, it's like, you know what, Trump, I'm going to show you at mofo what's going down. So Jim, where we are we on the taco trade and possibly the FAFO trade?
So I think the market has gotten used to the fact that Trump. And again, you can say Trump always chickens out. Whoever came up with that, I think, was trying. There are certain. And again, I was with legacy media for 25 years. They want Trump to fail, and they don't care if it affects them, and they would love to see him overdo something. And there's nothing more gleeful than watching Carl Quintanilla, who was a friend of mine, get all excited when the stock market was going down back in April because it validates them. Again, I don't mean to get too off on a tangent there,
No,
but
no,
what I
But Jim, I like going off on tangents. Sorry, let's
okay,
no,
good, yeah, good.
no, let's go there for 1 second because we know Andrew Sorkin. He's like flaming on one side. Okay, Kernan's the other way. Is Carl Quintanilla a lefty as well?
That's my belief. He said some things that seem kind of propagandist bullshit to me, and I
Yeah.
called him out on it,
Yep.
and he got very, very upset, blocked me on Twitter. And again,
Oh
this is
God.
someone who we were very friendly for a long, long time. And again, Jim Cramer came out saying that he wanted the military to break down doors, drag people out, and vaccinate them. Which, by the way, that if you just have that opinion, I think it's a wrong opinion. But if you have that opinion, but you're also the one who's taken enormous sponsorship money from the people selling the vaccines and don't disclose that, then you're a piece of shit in my mind.
Yeah.
And that's unforgivable. And again, I don't even necessarily want this to be about vaccines or COVID, whatever.
Hey.
He was a pawn of the
All
vaccine
right, hey
sales.
Jim,
Yeah.
Jim, you're gonna gotta be right. I already like you. You gotta be a regular in this space, okay? But but
Okay,
like
good.
right here, right now. I'm sorry. I told you to drive the car off the road, and I
And I
did
did.
better. All right, I'm now asking you to get the car back on the road. We'll get this other good stuff later. So okay, so let's go back to the liquidity thing. Keep going.
Okay, so liquidity thing I think is still driving. Again, everything is very, very correlated, and money's coming back into investment things. Again, the one thing that's different about the liquidity trade is that in the past, interest rates were so low across the board that it was easy to push people into risk assets. Now it's a little more difficult, but it's happening anyway. So I think this is a big driver of it. I'm a bull of the stock market. I think that what we saw on April 8th, that low that was put in. And I took a poll of about 200 different money managers, and they were saying they were getting calls, just emotionally driven people saying, Donald Trump is driving the economy off the cliff. He's going to kill us all. Sell me all my stocks. Which, by the way, if you are someone who looks at the different macroeconomic policies and say, well, this environment's not going to favor stocks anymore, I'm going to lighten up, that's one thing. But being an emotionally driven chicken little, the sky is falling and selling everything, I think it presented an outstanding buying opportunity. Did I buy it? No, I took some of my downside hedges off. I didn't exactly buy it to the tune I wanted to. But so then we see this massive thrust from that ridiculous low on April 8th. And then the liquidity trade comes in, and the deregulation and lowering tax trades comes in, getting used to tariffs and being not being as worried that tariffs are inflation. We at the Unfiltered Investor, Bob Icino, Mike Arnold, and I, we've been arguing with smart people, I'm doing the quotation marks, all year that tariffs are not necessarily inflationary, and they're usually not. Do you want me to go into why I think they're not, or no?
I think Jim, let's give it the abbreviated version. If people want to drill down to details, yes, but let's give us the high
Yeah.
level reason why I think it's not inflationary.
Because Trump was right at the beginning, and oftentimes the exporting country subsidizes the losses to remain competitive and boost up their sectors. And it's also a tax. The modern monetary theory people keep telling us that if you tax things, then it's disinflationary because it's a liquidity zapper from people. So they're not inflationary. It's a nonsense thing. Okay, that's my answer.
Okay, so what? So the flip side, just stay with that for 1 second. The
Sure.
corollary to that is so non-inflationary. Is it a does it act as a damper on growth?
Yes, it definitely should. But I don't think they've been instituted for long enough to really have that ripple effect. Nor do people necessarily believe that there's something that's permanent. I think with Donald Trump, you never know by design. It's a feature, not a bug. That you never know what the hell he's trying to get at and the deal he really wants. And Larry Kudlow's a good friend of mine, has been for 25 years, and he's also a good friend of Trump. And he says Trump's the greatest guy in the world, smart guy, but when it comes to negotiating, even his best friends, he won't tell them what he's trying to get at because he fancies himself as the world's greatest negotiator. Not so far, he's had some pretty good luck, so I'm not bashing him that much. But
Sure.
anytime someone, yeah, has that opinion of themselves, I start to worry that they'll be, reading their own press clippings and doing things that are stupid. But so far, it seems to be reasonable-ish, if that makes sense.
Reasonable-ish. I like that. I like that. No, that's right. That's spot on. Reasonable-ish. And then Jim, as they say, subject to change of that notice. Tomorrow's another day, so who the hell knows?
Bingo, exactly.
Yeah.
Right.
So what's the speculator supposed to do, Jim, with all this?
Well, if you had been listening to us for a couple of years, you were supposed to be in gold. You were supposed to believe that inflation was going to run hot for a little bit. You were supposed, and there was gold, and to much lesser extent Bitcoin, but I don't want to talk about that as much. But gold is a basic fu to the stewardship of fiat currencies around the globe. Now, we thought when this election happened in November, I thought one candidate would be outstanding for gold, and that was the Democratic candidate, only because they had been racking up debt to the tune of an extra $1 trillion of debt every 95 days. It was pretty amazing what that was doing. I thought that was going to propel gold higher. And I thought Donald Trump would be good for gold, not great, because he is a tax cutter. He has been deficit spender before, so he could run things pretty hot. And he has done that before, so I think he's pretty good for gold still. But at the end of the day, I think it is a vote of not no confidence, but little confidence in the stewardship of currencies, in particular the dollar, especially because we spend too much damn money. I'm going to add one more thing though. If the only way to reduce deficits and reduce debt, the only needle to thread was to run bigger deficits in 2025 to try to heat things up and then cut spending in 2026. Have I lost confidence that they're going to do that? Hell yes, I've lost confidence, just like everybody else is. Spending money is a religion to these governments, and they'll probably continue to do that. So I think you have to position yourself for that. And stocks are on my list of things to own if they're completely debasing the currency, which they are. And I have gold, copper, silver, Bitcoin, real estate, not so much anymore. It was a big play of mine for like 3 years, but so far I've shorted some. What do you call those non-bank lenders? And some real estate
Yep.
ETFs. I have shorts on, and I have some options plays for the downside because I think real estate is turning, and I don't think that's that radical opinion. Correct?
Yep. So stay with that a little bit. So
Sure.
I presume you know what the nest is. If you look at the up on top of your head, the first chart I put up, aside from showing for the conference I'm having, first one I put up was a chart. And last I checked, Jim, you do look at charts. I don't know if you can see it. Maybe touch it. You can see what it is, but I don't know. I'm an amateur technician. That thing don't look too good to me. I don't know. Do you guys?
Hold it. How do I see that? How do I see it?
Okay.
Did you put it up on your
Okay. Okay.
on your
Okay.
Twitter?
Do you have your phone open right now?
Yeah,
Okay.
I'm
Do
looking at
you
it.
see
Yeah.
something on top of you? What do you see over your head? Do you see
Over my
something
head.
shared by George Noble? Look right over your head.
I don't even know what that means. Look over your
Well,
head.
no, look
Over
above.
my
Look
head. Let's
above you.
see.
Look in the half inch above you. What's above you?
If you look at the
Oh, above
space
me
bar.
on the spaces. Okay,
Yeah,
I know
yeah,
what you're
yeah.
talking about now. Okay, above my head, I see three little dots.
Okay, so above the three little dots, what do you see?
It says early bird, show
Okay,
more,
okay.
George
Now,
Noble.
I want you
Oh,
to
chart quiz. I got
Okay,
it.
okay. Now look at that chart. I'm not gonna tell you what it is, but you're a futures
Yeah.
guy, you're a chart guy. Okay.
Sold.
Sold. Okay, there
Sold.
you go. Okay, now to be fair, it's only a year, but it doesn't matter if I took it back a little. But of course, I rebased and indexed it to make it get the outcome. I turned it upside down to get the outcome I want. You know how that works. Okay. Anyway,
Of course, of
anyway,
course.
what that is, drum roll for everyone who wants to know. Okay, and this is pouring gasoline on your fire. Okay, Jim, that is the TLT, the 20-year long bond ETF, divided by the FXE, the euro. So basically, it's the long bond viewed through the lens of a European investor. All right. And going back to your point and about gold and all this other stuff, yeah, I think we're just looking at, you talk about liquidity. We've had Michael Allen here, a lot of pay much attention to him. But you're looking at, destruction of fiat currency and just inflating the debt away, et cetera, et cetera, et cetera. And like why one would own a bond, if you were not clinically brain dead is just beyond me. Right now, stocks, I guess partially as a hedge against inflation, that works as well. But we are
Mhm.
destroying money here. And that I just look, and Jim, I know you know this, okay, but despite everything else, everyone focuses on the inflation and blah blah blah. Well, here we are. We broke 5% of the 30-year. We're knocking on the door on 450 on the 10-year. All right. And supposedly there's no inflation. And if anything, blah 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 blah. To me, there's information content in that. So how does that chart and how does the rant I just gave you speak to you? How are you
So
triggered?
no, I love the Europe thing because it was 16 years in a row that Europe had underperformed the U.S. in every essential measure. When they started increasing, when Donald Trump put them on the spot to increase their fiscal spending, particularly as it relates to defense, I think we saw them repatriating a lot of their euros. The euros up again. And then, by the way, I will add a side note. I went to Italy end of April, beginning of May. The month before I went, the euro rallied 13% against the dollar as a big cosmic fu to Jim Iuorio to make my vacation
Right.
13% more expensive. Anyway, sorry about that, people. Bond guys are pessimists. That's what Kudlow told me once. He goes, all you interest rate people are pessimists. But now, okay, so what we're seeing in Euroland is, I think, an unwind of a massive trade. I don't think that anyone genuinely believes that growth in the Euroland is better. I've heard it said that, and I pretend that I'm the one who said it, but just between us, I stole it. That Europe's a museum, China's a prison, and
Yeah.
Japan's an old folks home.
Yep.
So we still, eventually, people are going to probably buy our bonds. But to your point, what you're saying is that we have a shit ton of bonds for sale now every year just to finance the massive debt that Donald Trump is partially responsible for. I long argued that the 4 years prior to this year were like head scratchers of why we were spending so much money, where every economist, particularly those who take money from the left, Jason Furman, Justin Wolfers, Krugman, all these guys were saying, like, see, the economy's doing great, but nobody would mention the elephant in the room that we are, what is it, $37 trillion of debt now, which is, and the debt to GDP is absurdly
Yeah,
high.
Jim, it's the old line, it's like you give me your credit cards, I'll show you a good time. I can't remember where that came from. By the way,
Yeah.
Dilly, can you call security. We got a potential situation here. We got a
Okay.
couple Chicago guys. We got Jim and we got Joe. And I'm kind of, and by the way, beneath us, Howard, he doesn't live in Chicago anymore, but he is a Chicago guy. So I'm kind of getting a little worried here, Dilly. So just keep an eye on these guys. All right.
Okay.
All right.
It's a wise move.
There you
Wise
go.
move.
There you
Yeah.
go. All right. So Jim, I mean, we're just, I mean, it's just, they always, what's the meme? It's like, they want more, MOAR. It's like, keep pumping, baby. Keep on pumping,
Yeah.
baby. So gold up, crypto up, speculative assets up. I mean, it's all, I mean, there's different shades of different flavors of ice cream, but it's all kind of benefiting from the same thing, no?
That's what I believe completely. It's like, and again, the gold trade. We were on a podcast with this guy from State Street, a really, really bright guy, just yesterday, and we were talking about how, at the end of the day, this much of this is a scramble to protect your personal purchasing power. That's a lot of P's in a row, and
Oh,
I
God.
believe this is a real thing. Like, we have to look like they
God.
are really they're spending money ridiculously, and we have to protect our purchasing power. So you do that in creative ways. Now you can go all into stocks, and that probably work out, except for the fact that occasionally we have 35% drawdowns, and the timing of that could be ridiculous. So to have some in gold, and we at Unfiltered Investor, we were very much into the silver and the copper and the platinum metals group catch up trade that really happened, which I still can't fundamentally explain why those metals went through the roof. Is it really a commentary on some sort of global growth spurt that's about to happen? Or is it more that gold was at such astronomical levels that the market and the big institutional players are like, okay, well, what else can we buy if gold is
Yeah.
too expensive? And then all of a sudden everybody
So,
decided on
so,
those
so, so,
trades at the same
so
time.
you, Jim, you don't know this, but I kind of am worried about you because I think Dilly's going to solicit you to become a like hardcore Bitcoiner and run some of the rooms. And Joe, the other Chicago guy, like protect your purchasing power. Like if I didn't know any better, I'd swear I'm listening to Joe. So Joe, Jim, you are surrounded on either side. I'm just warning you.
Good,
So
good. By like-minded people. I like it. Well,
there you
Dilly,
go.
where are you on Twitter? I'm not familiar. Where can I find you? What are you under?
She's on
Dilly Couture. You can click
Dilly
Dilly
Couture.
my
Dilly Couture.
yes.
Dilly
Okay, good.
Couture.
And I can follow you right there.
Yeah.
Okay, good.
Yeah,
Yeah.
and Jim, I don't know. You and Joe should start playing Chicago geography thing because you probably know all the same people.
Oh, I'm sure we
But
do. Is he
anyway,
Italian too? His first name is Joe. I can't see. Is his Italian last name? Oh, of course it is, right?
Yeah,
Yeah,
of course.
yeah.
he's my people. There's no question. I'm following him
There
too,
you
Joe.
go. There you go. All right. So Dilly, I'm going to take credit for having made this introduction to these two guys there, even though they live in the same city.
Perfect.
All right. Sorry. So Jim, you want to do anything except hold those little green pieces of paper in your pocket because they're going. It's it's not so much the assets are going up; it's that the value of money's going down. Isn't that a
Exactly.
yeah?
Yes.
Yeah.
Well, again, and I argued this, and hopefully you'll find this interesting because I argued this 6 months ago when everybody was talking about the everything bubble. It's not an everything bubble. It's just the dollar is about 65 or 70% of what it was worth 4 short years ago. So
Sure.
every asset that's denominated in dollars has to have like a 30 to 35% rally just to account for that. So I don't
Yep.
think you can't call things a bubble unless you're seeing weak hand margin build up, build up, build up over time. These aren't
Right.
bubbles. These are just a reval of the dollar, and you got to find the place that it revals the best.
Well,
And
yeah. And Jim, to kind of trigger you, like I would actually argue the bubble has been. I think we kind of know this. It's the rest of the world being overweight dollar denominated assets, us sucking in all that money for their bond auctions and the greatest story ever told, U.S. American exceptionalism with QQQ and the Mag 7 and all that nonsense. And yes, price has gone down. And yes, I look at the sentiment data the same way as well as you do. But what I observe is the world is still massively mispositioned in terms of overweight dollars. And last I checked, the dollar's still pretty overvalued based on the typical measurements you might use. And the chart looks terrible. And we're running crazy policies here. Jim, what did I miss for all the reasons why
no,
my
no.
computer
And
go
here,
down?
and I can just add on that is that I believe that 50 years of the dollar domination has created this hubris that people like smart economists go to work in the government like, what are they going to do? Are they going to buy the yuan? What are they going to do? They're going to buy the bricks. And by the way, I will add something that you didn't say is they're probably right. I don't believe that everybody's all of a sudden going to abandon the dollar. We're going to be in a
Oh,
hyperinflation
no.
sort of
Nope.
situation. But I
Nope.
do think, like, 10 years ago, if you had asked me, I said it was a 0.1% chance that in 20 years we'd have some sort of currency or bond crisis. And now, if you ask me, I'd say it's 5 to 7%, and that is atrocious to me. That is, you have everything going for you in the world when you have the dollar as a reserve currency. You have the most trusted bond market in the world, and all of a sudden you're messing that up because you're spending money
Hundred
ridiculously.
percent. Hundred
And
percent.
yeah, I think it's unforgivable. And again, guys like us, like, we know how to protect ourselves from it. But if when currency collapses happen, and again, I want people to know I'm not saying currency collapse is happening. I'm saying the odds of it are growing. That's the word. We've seen in Caracas where the feral cat and rat population goes away because they become a food source for people in a currency collapse. Where young mothers have to sell themselves for half a loaf of bread to feed their kids. These are the worst kind of things, and to risk it in any way, in my opinion, is unforgivable. And
Yeah,
again, as yeah,
in gym too. It's like people sometimes, they get. I think they go nuts. Man, you and I are soul brothers. Totally with you. So people say, "Well, the dollar's going to go away." No, the dollar's not going away. The dollar's
no.
going to have value, but right now there's no obvious candidate to replace the dollar reserve currency. Doesn't mean the reserve currency can't go down in value. And so, like, if you go back, wind the clock back, like look at the pound sterling. When the Brits were riding high, wind the clock back a bunch of decades. Okay, that POS has been in a secular decline. All right. And you start looking at the numbers now. I've lost track of how many hundreds of trillions we're talking about. I think the global bond market, from memory, is like 325 trillion, and equities are, I don't know, 100 some odd trillion. Blah 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 blah. And add up the real estate. I mean, you're probably getting. Let's about financial assets. Okay, let's just stay with that. Forget about real estate. You're talking stocks and bonds over $500 trillion worth of paper money. All right, and then, okay, forget about currency and circulation. Then, and Dilly, I'm not shilling for Bitcoin. I'm trying to make the point that Jim's getting at. If Bitcoin has, just to stay with Bitcoin, which has a cap of what, 2.5 trillion? Gold, Jim, I think is like 20 or 22 trillion or something like that. That is tiny, tiny, tiny compared to the hundreds of trillions of dollars in these financial assets. So if just some small percentage of that at the margin, which is starting to happen, it's not, you don't have to be in love with gold, you don't have to be in love with Bitcoin. It's not that they're running towards these assets, they're running away from fiat money. That's what people don't understand. And so,
What can I add to that, George? That is exactly 100% right.
all
I
right,
have
so all right, so,
nothing.
so, so, so Jim, I should come on your show next time. Then you know what?
Exactly.
There
You
you go.
sold it.
There you
You
go.
stole
Sold,
all
sold.
the thunder away. No, I agree. But here's one thing I'll add too, and I've said this very publicly. I believe in 10 years' time, Bitcoin's either going to be a million or zero. Okay. I actually, if I had to make a binary bet on that, I'd probably bet on zero. However,
All right.
if I only have that as a 30% chance, I mean, a 30% chance of going to a million, 70% to zero, then the risk reward still favors me having a small allocation to it, which, by the way, what started out as a small allocation now is something that's keeping me up at nights as to what the hell I
I
was
was
going to
gonna
do with
say,
it.
I looked up when you bought. If you bought when
What?
BlackRock bought, you're sitting really pretty right now.
Yeah, but now it's a position that I have to worry about, and that's not what I intended, Dilly. So now it's like it was supposed to be 1% of my investment. Now,
Oh,
now it's like,
oh,
yeah, okay,
oh, high
yeah, now
class
I'm
problem.
right.
Oh, Dilly, don't you love this? Oh, I've made so much money now, I have to worry about it. It's a
Yeah,
problem.
yeah, he
Oh,
has to worry
oh,
about it.
Yeah,
And
no,
excuse me,
okay,
excuse
I'd like to
me.
there's
formally
no
Oh,
chance it's
apologize.
going down to
Right.
25, which is probably about where you bought in. So,
Yeah, so I'd
hmm
like to apologize because you're right. That was kind of a humble brag. It's probably a short guy thing if I can explain it away like that. Always having to punch above my
well,
weight.
it's,
But
it's,
anyway,
it's, all right, so Jim, Cubs or White Sox?
what do you think? I got a full set of teeth. You think I'm a White Sox fan? Next question.
We got to get Joe up here so you guys can start doing the Chicago thing. Or Howard, well, you got to come up here. Come on,
Can I
I
say
need some
something?
Chicago.
Can I say something real quick, George?
Yeah, go for it.
I was on CNBC like 15 years ago, and I
Sure.
was kind of in the moment, just kind of talking about something. I was talking about an event. I said it's not impossible. It's not very likely. It's like seeing an attractive woman at a White Sox game. It happens on occasion. It just doesn't happen every day. I got an email about that. I'm like, are you
Oh
serious?
boy. Oh boy.
I'm like, oh shit.
Oh boy. Oh
Yeah.
my God. Oh God. So all right, so while I want Joe to come up here, or Howard or David or somebody. So Jim, what's the deal with Rick Santelli? I love Rick's energy.
I love Rick too. I think Rick is a great guy. When I started to blow up at CNBC, because the whole thing happened, anytime I complimented a Donald Trump macroeconomic policy or criticized a Barack Obama policy, I would get an email, as would John Nigerian. Well, we'd all get the email, but everybody
Really?
then, yeah, everybody would text each other like they're really talking about you and John Nigerian because I didn't. And again, I'm going to be the only guy who was canned from CNBC for not hating Trump enough, and then eventually gets canned from Fox by not loving Trump enough. So I'm going to wear that as a badge, by the way, just to be clear. But Rick is the only guy when they decided to get rid of me, which, by the way, I will tell you this, that I did say to an executive producer that I said, I'm not saying my integrity isn't for sale. I'm just saying you guys are 2 zeros too short. I thought that was really funny. They didn't think it was funny at all, by the
Oh
way.
God. Oh God. Oh
But
God.
anyway, yeah, oh God is right. But anyway, Rick was the only. Apparently, there was some conference call where he bashed the shit out of management for getting rid of me, which I think I love him for that. So I can only say good things about Rick.
So let me ask you something. You don't have to speak about your. You can speak at your own experience. You can speak in third person.
Sure.
Other people have mentioning names, but like for instance, okay, there's another Midwestern guy, okay, who I think he's Chicago. All right, his name is Shill LeBeau. Okay, now I can't believe that someone is willingly, as dumb as he is, to shamelessly shill for Elon Musk and Tesla. It's like, so like, what is the deal? Are they like the or like Kathy Wood? Not him. It's like they never say anything bad about Elon Musk. Everything anything bad Kathy Woods. Blah 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 blah. Like, what's the deal with that? They kind of like the official FinTwit station for the sponsorship. Like, what are
Yeah,
it's
no, it follow. I always follow the money, and there, if there are sponsors on that show, they won't. It's a propagandist network, and again, one of the reasons you're doing this, I assume too, and why we do the Futures Edge and the Trader's Edge is because we're sick and tired of having to be part of some propagandist agenda. It was always some producer who'd come to us and say, "Well, you can't really say that." I can't really say that. What are you talking about? And like, if they are not allowed to come on and say Pfizer is a screaming sell unless they've had team meetings like we're getting accused of being a
Well,
propaganda. We should probably do something.
And Jim, it's even worse. They keep hauling out, or used to at least. What's his name? The guy who used to be the FDA guy, the Pfizer director dude.
Oh my
Scott
God! Don't even
Gottlieb.
get me
Scott
started.
Gottlieb.
Scott Gottlieb.
Okay,
Yeah,
like
yeah.
how Scott Gottlieb, especially everything that's come out. Okay, how Scott Gottlieb could show his face in public. Okay, and then and you know it, Jim. And we all had to have. Oh, but look, the jab is fine. And by the way, I did get vaccinated, just so I don't want
I
anyone to
did
think
too.
I'm okay.
Yeah.
Everyone's like, oh, Scott Gottlieb. Oh, if he's saying it, it must be true. Da, 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 da. And it's like it's like gaslighting. Like, oh my freaking god! Like,
Jesus Christ. The guy looks like the villain from Central Casting to begin with, doesn't he? And I remember looking up at the TV in my health club, seeing him on for like the fifth time in a row, and saying to myself, my days are officially numbered at this station because everywhere on that screen, it should have said Scott Gottlieb, who's a massive shareholder and on the board of directors of Pfizer. So you might not want to, it's like going to the tire guy to say, hey, do I need new tires? Well, of course you need new tires. That's what he sells. Do you need the vaccine? Of course you need the vaccine. That's what I sell, you dumb shit. So yeah, Scott Gottlieb, like that guy, to me, he comes across as evil. My belief is that he's evil. I can't imagine we're ever going to be buds in the future. And he would. I
and,
knew that my days were numbered.
okay, and how is Kernan kind of like the token non-lefty? They keep him there to give some appearance of balance. Like, what's the deal with Kernan?
Yes, yeah, that is absolutely how you just described it. I think that I like Joe again, but he broke off communication with me, and we were friendly. We were friends,
Yeah.
and I think he was kind of had to break off communication with me. But I will say this: Brian Sullivan, stand up as shit, good guy. So communicating with him quite a bit. Joe, I think is there to preserve some semblance of balance. I think Brian's there because he's probably got a longer term contract and they can't get rid of him quickly. But by the way, like there's a lot to that at CNBC, like when your contract comes up, when they get rid of it. That's why John Nigerian lasted a year before me because my contract was up for renewal. And they were like, yeah, we're not going to renew it. I'm like, yeah, I figured you wouldn't be renewing it. But Joe's a good guy. I'm still mad at him for breaking off communication with me, but Brian Sullivan's a great guy. So everybody on there isn't crap, but most are.
Yeah, and in particularly, I mean, there are. actually, I want to be careful. I mean, they always say you can praise specifically, but only criticize generally. I mean, I just think of, all right. Well, no, I am going to be specific. Okay, when you have someone like what's her name, the Fast Money lady,
Melissa Lee.
Melissa Lee. She's married to what's his face. God, who's is it? It's not Dan Ives. Who the hell is she married to? All right, it'll come to me. But just the conflicts of interest. It's
Crazy.
just, and they do this with a straight face. I'm like, how can this
Mm.
be? How
Yeah.
can they live with themselves?
Well, there's no question about it. And Joe, by the way, I think it's Joe. He's married to somebody who's very influential at the station too. Is my I'm not 100% sure that I knew all this at one point in time, but when I stopped caring about it as much, I
Yeah,
started to forget it. But the conflict of interest that run through that place are ridiculous. Which, by the way, the entire model doesn't work for balanced financial reporting. If you take that level of sponsorship, 70% of their sponsorship comes from pharma. Do you think they're going to give us a balanced look at pharma stocks, the vaccine, when 70% of their sponsorships comes from that? No, it's ridiculous. And that model's broken, which, by the way, I love any small part I've had or you've had in breaking up that model. I wear
sure.
that as a point of pride. I love it.
Yeah, no, it's we don't try to be renegades here, but you mentioned something, you tapped into something, and I don't want to make this political. It's not political, but you said something very important, which is people know they're being fed a line. Okay, they just want the truth. All right, and whether it's in politics or in media or in finances, people know they're being fed a bill of goods, and that's why they'll listen to someone like you. That's why they come in here and they hang out here because listen, we don't have all the answers. I get it wrong a lot of the time, but at least we're trying to be honest brokers, so to speak.
There's no question about that, George. I think, and that's so important right now. And I don't think this bell is ever going to be unrung. I think we are winning. Like 150,000 people watch each episode of our Futures Edge. Me and Bobby, we're just a couple of dumb shits from the trading floor, and at least we have good guests and we give an honest opinion, so people are watching us. And it's a pretty amazing thing that's
So
happening.
yeah, so tell us about your show a little bit. 150,000. Tell us a little bit more about it. How often is it on
So
and when is it?
we record it every Tuesday.
Yeah.
At half the time it's live, depending on who the guest is. Like if it's
Where can people watch it?
it's on Apple, it's on Spotify, it's on Rumble, it's on
And,
we put it on Twitter and YouTube as well.
and Jim, what's it called? Dilly will put it up in that. It's called what's it called? Futures Edge.
The Future's
Okay,
Edge,
go on. All right,
yes.
Dilly, see if you can find. Keep going, Jim.
Future's Edge. And so if we have a guest like a Jim Bianco or someone who's been in the
Another
market for a
Chicago
while.
guy. Yeah, good guy. Go on.
Yeah,
Yep.
another good
Yep.
shot. Well, then we run it live. If
Right.
it's someone who is a broader economist who talks
Sure.
in quarters instead of days, we will record it and then clean it all up and then release it a couple days later.
Right.
So, but we any support that anyone can give us, we love it. Our sponsors have been great. We try not to take big financial company sponsors, so our sponsors have been like meat companies. We're both like mostly carnivores, coffee, meat, things like that. We people who won't mind us saying whatever pops into our head. I'm not going to take Pfizer as a sponsor. Again, like I said to CNBC, if they come in with $1 billion, maybe I'll think about it. But whatever, you know what I'm saying?
Well, yeah. Well, Jim, everyone. It's just everyone's got a price. Just a question what your price is. That's all. So, by the
Exactly
way, I gotta
right.
ask you, Jim, is Chem also a Chicago guy, the volatility guy?
Which guy? Who?
Chem Carson, the volatility guy.
Oh, I know who he is, and I didn't know that's how you pronounce it. I thought it was Kim, but I don't know that he's a Chicago guy as well. He's a really smart guy, though. By the way, I read out all his stuff. I like. He's the one. Didn't his wife pass away a couple of years ago? Is that the
Yes,
one?
he did.
Yeah, it was
Yeah.
such a sad story. But he
Uh,
seems like a great guy. I don't know him personally, and I don't know if he's a Chicago guy. Brian Westbury, another Chicago guy. He comes on our show all the time. You guys know you're familiar with Brian, right?
sure. Yeah.
Yeah, he's a good man.
And by the
Yeah.
by the way, do you so you're a Chicago guy? Do you remember? I think he's still alive, but he's not active anymore. He's kind of gotten older. Do you remember Don Cox?
I don't. Should I? What does he do?
No, he's a former strategist. He was at Harris for a while and whatever. Good guy. Good guy. So
No, see, I don't
yeah.
know.
All right. So it's
Mm,
coming back to market. Sorry, this has been but well, one last thing before just a little more of a gossip trade. So
Sure.
we gave us a little inside baseball on CNBC. You don't have to name names, but generally speaking, how would you compare and contrast CNBC and the inside baseball stuff with that which goes on, say at Fox Business or Bloomberg?
This is a tough one for me because I think everybody has a bias, myself included, and my bias is for limited, less government, lower taxes and regulations, things like that. And I think the Fox people, let's say this, is that their bias is the same as mine. So it appears to me that they have no bias. But I'm not stupid enough I don't believe that means that none
Sure.
of us have bias. So we do. We just have bias in the other direction. So my opinion is that our bias is way more right than the other side is, but that's just an opinion. Bloomberg, I don't listen to very much. I think, but I do. I used to listen to it in the morning, and I think there's a couple of those, particularly the women, who are smart as shit. Is it Anne Marie Horton? Is that her
Well,
name?
I think Lisa Bramwitz is really smart.
At least that's actually who the one I'm thinking
Yeah.
of. Lisa Bramwitz is smart as a whip, and when she talks, I listen
Oh
to
yeah,
her
and
for sure.
plus I have a crush on her, but we'll leave that aside. But no, she's
Yeah, can we still say that? We can still say that in
no, but
2025?
no. Well, yeah, Dilly, can I say that? Am I being misogynist?
Yeah, you're allowed
Because
to
I
say
say it
those
all the
words.
time, but I thought
Yeah.
that would get canceled again. That
I
shit.
mean, Dilly, I didn't say she's a piece. I said I have a crush. It's a reflection. She's an attractive woman. I have a crush. Yeah. So now, Dilly, someone going to say to me, "Well, George, you couldn't talk about her without mentioning her physical appearance, even though it's a compliment." Like, am I going to get nailed for that?
I don't think so because we're on Twitter, but
Yeah.
yeah.
I should have had an anonymous Twitter profile. That would have saved me a lot of.
Hey, Jim.
Yeah.
I don't know if he's coming in tonight, but you have to come back for when. Listen to me carefully. Not Stan Druckenmiller. Van Drunkenmiller comes in. Okay, Van is a regular guest in these spaces. Van, just so you know, nobody knows who he is by day except me. All right, Van is an RIA who, for obvious reasons, can't really say very much. Okay, but when he comes in his van, he can say whatever he wants. So, Jim, I really think you need to consult with Dilly. We need a brand consult. We need to make up a new character for you. Oh, Jim. We have other characters. So, Jim, no one's listening to this, but I think just Dilly, you and I, Jim. So Jim, we have a new character. We haven't found anyone who's willing to play him yet. Dilly, can we get Jim to audition for the role of Howard Nutkick? Do you think?
Howard Nutkick.
Yeah.
For
So
sure.
Jim, you could be Howard Nutkick. Do you think you could be Howard Nutkick for us?
Oh, there's no question about it. Not only I would embrace that, and by the way, I will tell you what my qualifications are. We on the Future's Edge, one of our goals was to have balanced financial talk, but it was also to bring back the word nards. It was a good one from the 70s. Like, oh, he took a shot to the nards. Anyone who owned that stock got it right in the nards. So I think Howard Nutkick is a good corollary to bringing back nards. So I think I'm uniquely qualified. That's my opinion on that.
I agree.
All right. So Jim, Dilly and I will speak to you offline, but
Okay,
we've been looking for Howard
Howard
Nutkick.
Nutkick.
All right. So,
just
by
done
the way,
that 10
we
years
have
ago.
another we have another character. If you don't want that one, and I see David is putting up the emoji thing. We have another one. There's another open role. It's hard to find people. We also have another one we've made up. His name is, wait for it, JD Rants. JD Rants. Okay. So you can be Howard Nutkick or JD Rants. Van Druckenmiller is already taken. But
Well,
anyway, so
I
there you go.
always go with the nut references because
All
that's
right.
kind of my
Or Dilly wanted butt kick, but we kind of decided nut kick was
No,
better.
it's or nut lick, but I think
Nut
nut
lick.
kick.
No,
Yeah, nut kick
that's
is
just
way
over
better.
the line, Dilly. Right?
I
I'm offended.
didn't come up with that. I think that was George actually.
Yeah, I expected you to keep us a little bit in line, and then you go off that.
Jim, even though it's our first date here, you can understand why I have Dilly by my side as my co-host, because I need someone to keep me in line here.
There's
with
no
this thing.
question about it. Yes, no
Because you know this goes sideways. All right, so David is up
We
with us.
can't
So
have him
David,
going rogue.
yeah. So David, who's not from Chicago. So David, what's going on, man? Like, are you what? You want to be nutkick, David? What's going on?
No, I can't, George. You know how recognizable my voice is, unfortunately. I'll need to get a voice changer and so forth. Like, Jim, to give you context, I have an alternate account as well, but I go on to any space and they all know it's me immediately. So it's fun.
You have the little accent? I do. I will know it's you. Right, exactly. Yeah.
Yeah. So David, what's going on? Are you shared Jim's view on the dollar and gold and Bitcoin and the whole liquidity picture? What are you thinking, David? I haven't talked for a while.
Yeah, so I think like This is what I'm going to ask Jim. Structurally speaking, currently, unless we see continued deteriorations within like economic data, on one point we see potential further weakness within the financial industries. There's still no structural reason to be bearish on the S&P or even U.S. equity markets. I think like the dollar and gold will have certain impetus to move higher, especially if we continued seeing this pressure. But structurally speaking, there's no true sensible reason to be short the S&P.
David, I don't disagree with you at all. The week of the labor data, the first week of this month, scared me a little bit. I thought that ADP number was shit, and then I thought the NFP number, if you looked under the hood, it was not the greatest number that they pretended it was. So I thought there was some deterioration in the labor number. But even since that time, the weekly economic index, which is, I don't know if you guys know Mike Singleton at Invictus Research, a really, really smart guy.
We do not. Go ahead.
Okay, but anyway, he's a big fan of not that the weekly economic index is that great an indicator, but it's high frequency and it's real time, and that's actually started to tick up a little bit in the last 2 weeks. So I'm confused as to where the economy's going. I do think that the deregulation part of the Trump administration picture is not being talked about quite enough, because I do think it's generally happening. And I again, David, I agree with you. I like, if someone's saying when you're my age and you've lived through two complete bubble busts, and every time you start to look for ghosts that aren't there. And I don't think there's the leverage built up. I don't think there's the mom and pop leverage that's built up that's going to propel us to any sort of massive 20-25% correction. I mean, I know that we did have a massive correction in April that almost, what was the tune of that, about 18-19% in the S&P. But I think that, like I said, I thought there was emotionally driven stupidity, and it didn't last very long at all. It was followed by the massive thrust. But to your point, as long as, one of my favorite indicators to long term, the weekly chart, the 200 week, with the 21 week and the 8 week are my three favorite moving averages. As long as the short, all the different time frames, we are expanding on that, and I still am a bull.
Yeah, and by the way, Jim, if you, again, to go back up to the nest, if you just move the finger over a bunch, I put up the one, move it all the way over to the left. I put something, the always insightful Buffalo. He's a must follow. If you touch that and touch it again, Bill's really good. He always comes up with this annoying stuff, which makes me change my mind. That's the best kind of stuff to read. Okay, he shows that withheld income and employment taxes for the 2 weeks ending July 11th were up 10% year on year. And you look at that series of data, and it's spelling out exactly what you're talking about, Jim.
Yeah. Okay, good. I still can't find it. Something happened now to my phone where I can only see the bottom part of those, of the little dot things. So let's assume I see it. And I think, yeah, that's
You know what, Jim? I'll send it to you through a direct message. You can see it yourself. Okay,
please do, please do.
yeah,
But I'll add something else too. Is that, when Donald Trump was elected and we saw the biggest jump in small business confidence. No, what do you call that indicator again? Small business optimism. Small business, the biggest jump in the history of that index. Now it's been tempered a little bit. Well, of course it's been tempered a little bit when you have legacy media, from all different angles telling you how crappy the tariff's going to be and how they're going to break everything up. But I expect that number to start heading higher again too, because I do think the corporate sector feels like a Trump presidency has their back. Again, that's not a political commentary.
Yeah,
That is a policy commentary.
exactly. And the last thing you said, Jim, is the most important, because whether you like him or you hate him, okay, let's just leave politics out. Our job here is finance professionals to figure out how do we make money. Forget about it's the old line, Jim. It's like, don't play the you can't play the game. You don't trade the market you want. You got to trade the market you have, right? And
No
so,
doubt about it.
and the problem is, you start getting into conversations like that with people, and they wear their politics on their forehead, and they just go Coco Loco, and it's like, okay, whatever. By the way, Jim, if you look at your DM, your direct message, I sent it to you so you can see it. All right, so Jim and David. So all right, so Jim, take a rest. David. So let's say I agree with you, which I do. If I were to say to you, David, hallucinate for a little bit here. Okay, a couple questions. A, everything else equal, what does it mean for bond yields? And then B, if I had to say to you, hey, you know what? Despite the fact the economy will be okay, blah, 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 there won't be a recession, blah, blah, blah. For $50 in Double Jeopardy, if I had to ask you, okay, we get to the end of the year and it's not going to have a happy ending, like something will have not worked out so well. I'm asking a loaded question. What do you think the most likely reason would be? Why would that be? So, two questions. What do you think about the bond market? And the second question is, what's the biggest risk to the market, David?
So yeah, I think the bond market, we're going to see continued divergence between yields and equity prices. Yields will continue climbing, while equity prices are going to continue being slightly positive. I think that there could be some form of intraday type functions where we'll see the market react a bit more aggressively because of yields, almost like what we saw yesterday. The long end of the curve came up above 5%. Same thing for today. I think that that's a mixture of positioning. Long end of the curve is evidently pricing in something else versus that at the short end. Evidently, we all know the classic Fed funds and how it relates mainly to short end of the curve versus that of the long end, and the long end has its own animal spirits behind it, and that's to be determined. I think that there's still some form of conjecture there. To conclude that statement, I think that we're still going to see this bifurcation between yields and that of equity prices, where we're going to see the dynamic where yields are still going to climb higher, whilst equity prices still perform in a way that's slightly more positive than anticipated in relations to that specific function. Now, I think what's going to occur, and I think your last conversation with Danny was fairly interesting as well, is the potential inflationary scare. If we do have deteriorations throughout Q3 and Q4 of 2025, and that persists, and we have higher spikes of inflation and inflation expectations, I think that that's going to create some form of let's say, over exogenous type reaction the markets is going to have, and especially if we have the quote unquote Jerome Powell removal of the Fed. I think Powell, for all intents and purposes, has done a fairly adequate job. If we're looking at the current individuals that are being listed to come in and replace him, we all know that it's going to be a form of like quote unquote fiscal dominance, where they're going to be much more inclined to appropriate fiscal demands, meaning lower rates in order to stimulate the economy. But it's going to work inversely to their anticipations, and we might even have more inflationary pressure. So all in all, I think that yields, and to finalize that, I'm going to be really quick. Yields and equity prices are going to trade in an appropriate relation. That whole classic yields up, equity prices down is not necessarily going to be as valid as we've seen within the last year. And then the biggest scare is going to be this conjecture behind Powell and the removal of Powell and inflationary pressures that might continue to persist within the market, especially if we have tariff programs, because the first initial brux of that is going to be a form of potential deflation. I did mention this to Danny in a separate conversation, where the idea of front-running goods is going to occur within corporations. We might have this little moment of deflationary pressures due to that front-running, but over time we're actually going to see persistent inflation, and that's probably going to be the biggest problem, because if we do see consistent inflationary pressures and a Fed that's less restrictive, then we've shot ourselves in the foot.
Right. Love it. Can I ask a quick question?
Go.
So, David, my thesis has been for several years, is that if 10-year yields started to climb above 5%, and there are places uncomfortable, and again, I bolster this now by the fact that the Fed has essentially stopped its quantitative tightening program. Do you think that either this Fed or the next Fed would be stupid enough to come back in, buy the bonds again, restart quantitative easing? And in which case, which by the way, I do think that. I'm curious what you think. And that's one of the reasons that I own gold, silver, stocks, all that shit. What do you think?
I would agree with you, Jim. I think that is a fair amount of risks. There has been a lot of academic studies, by the way, that QE is actually more pertinent within a ZIRP environment or a lower rate environment, evidently just due to the structural dynamics that entails. If we do see this variation in this hypothetical play out, there's going to be lower demand for the long end of the curve. There's going to be a need to absorb that lower end of demand. Either there's going to be an agreement within financial institutions institutions, primarily on the banks with the Fed, to bolster up reserves by them absorbing said lack of demand. And then we have that equation where there's definitely going to be some form of ramping up of QE. And obviously with the reduction of QT, it's essentially going to just amplify that dynamic where they're just simply going to need to absorb that lack of demand. And we're not going to see a continued deterioration within the yield curve. We already see a lack of potential foreign demand. It's not significant to a point where it's something to worry about, but it is something to isolate. But yeah, I do think that is a risk, Jim.
Now my question to Dilly and George: why the hell do you have me on when you can just tap a guy like David? He'll tell you all this shit. He's good at it.
No,
we talk to him every
Okay,
day.
good.
So.
David's part of the A team. He's in here all the time. Okay.
Yeah.
And so Jimmy, you got to we got to hang out in your show. You got to come in here more often. We got a lot of sharp cookies.
Love it.
It's a smaller group today, but we got a lot of sharp cookies in here. So yeah, no. So Jim, what do you? I know you're not an inflationista, obviously, but I don't want to infer anything, but what is your take on the bond market? One, and then same questions to David, and then two, what's your biggest concern for the equity market?
My biggest concern in the equity market has already been realized. I guess what I would say is that I'm missing something economically. And again, like I said, I was a little bit, my hair stood up in the back of my neck when I saw the labor numbers, which I did not love at all. If all of a sudden things are starting to deteriorate at a faster rate and Jerome Powell really wants to be stubborn, again, I know a little bit about stubbornness. And if someone's beating you over the head saying you got to ease, I understand the proclivity to not want to ease. I don't think he's going to let that override his sensibilities. I hope. One thing I would disagree with David on is that I think in 20 years, we're going to look back at the Jerome Powell time at the Fed and say, we have to consider it somewhat of a failure. In 2021, June of 21 specifically, CPI was already over 5%. The real estate market was inarguably on fire. And what did he do? He doubled down and hit the gas. I think that was a massive mistake. I think he's doing a nice job now trying to thread the needle and have a soft landing, but I'm never going to forget the fact that he's just cleaning up a mess that he made. But my biggest worry would be that he sits on his hands and the economic picture starts to deteriorate. But even then, I think it creates a buying opportunity. I think there's been a massive change in, again, I own a restaurant in Cook County in Illinois, and the
wait. Commercial phone number, please, location, and does it get a good review? Does it good? Go on.
807 Quinton Road. It's called Brants of Palatine. It was moved to where it is now in 1931 to be a speakeasy during Prohibition. It is a center of an enormous gang war between the Capone gang and the gang of Roger II, who was the gangster. Like 300 people were killed, including the mayor of Chicago, as Capone tried to get a hold of the beer making operation that was in my town and the places that were selling it, like my restaurant.
Is the food any good?
It's shit. No, of course it's good. I bought it because it's good. The food's great. We win awards. We win awards for burgers and ribs. We really do. And we did before I even owned it. We bought it.
Yeah. Jim, what's the series? I can't remember. Was it The Bear or whatever? The one, the restaurant, the Chicago thing?
The Bear.
Oh, yeah.
What the hell? Is that bogus? Is that good? You like that? What is?
I love it. I think I love about it the most is, I've worked on a trading floor for 38 years. When we're really busy at the restaurant and I go in the kitchen at the restaurant, it is more stressful and more intense than the Eurodollar pit on unemployment day 15 years ago. It is crazy. And I love the fact that the Bear catches that. So the Bear is restaurants, Italians, Chicago, crazy people. It's like all my favorite things wrapped on. I will say that's season 3 of The Bear. You need something to be happy about. And season 3 did not give us anything of that, and I was pissed about that. Seasons 1 and 2 were great, and I'm looking forward to start. As soon as we finish the Night Agent, I guess is the show we got to finish tonight. Then we're going to start on season 4 of The Bear.
Wait, hold on. I watched a couple seasons of Night Agent. Am I missing something? Is there another season of Night Agent running right now? Maybe I'm not up with this.
There's two seasons. I know we're about done with season number 2.
Okay.
And I think it's pretty good. Again, to say that I have a choice of what goes on our TV would be acting like I run my household, which I do not. I mix a drink and sit down and we watch whatever my wife says we're watching.
Sure.
So
Good man.
Thank you. And tonight we're watching I'm going to go to the restaurant in about 5 minutes, work there for about an hour, then come back, have a drink, eat dinner, watch some Night Agent.
Hey, Dilly, how far are you from Chicago, Dilly?
I'm probably 3 hours. I was actually born
Well, all right. Well, wait a
I'm
second.
Italian.
Maybe our first date should be at Jim's place. I'll fly out there and we'll
Yes.
meet at Jim's
Oh,
place.
George, let's
Yeah,
do
for
We have
it.
fun.
sure.
Yes.
No,
I'm
we'll
telling
do
you
that.
guys,
Let's
We will do a
go.
space from Jim's place.
I think you would
Yes.
absolutely love it.
Let's
Yeah.
do
That'd be
it.
great. All right.
By
So
the way,
Jim,
can I tell you a quick
yeah,
story before I
yes,
check out? So
please,
there's a
please.
guy I met on Twitter, a couple of years ago, and he sent me a direct message. He's saying, "Just I like the way." He said, "I like the way you handle conflict. You're always kind and nice to people. I'm in Mundelein for a couple of weeks in Chicago. Can I come by your place and we could have a beer?" And I was like, "Sure." And to tell you the truth, I forgot about it. I got there the night we had said, and I forgot about it. But then I look, and in the corner reading a book is this person in full priest garb, the collar and everything,
Right.
and saying that's who I was supposed to meet. And since then we've become good pals. He's literally, I'm not the most religious guy in the world, but this guy, like, he's this priest, and Mundelein is where the seminary is. He's a PhD in theology, and he just, like, he'll say something, he'll look at you, and it's like he sees right through your soul. Again, I'm not the world's most religious man, but somehow this guy has, like, become my moral conscience. I text him every couple days. So
That is
yeah, and he loved
awesome.
rants too. Yeah. Mm-hmm.
That is
So
awesome. All right. So Jim, before you leave, you can't leave. Before you leave,
by the
okay.
way, that's a great movie. Does everyone else understand
Oh yeah.
what the reference is? Now you just can't leave.
Oh,
Okay,
oh,
good,
oh
because
yeah,
that was
no,
a great
no, no,
movie.
no. Our favorite technician, John Roque, is not here today. A good Italian kid from the Bronx. He's always invoking that. So Jim, you have to come back. This will. I
Love
hope
it.
this you got to become a regular here. So you're always welcome. You always have a home, kindred souls, and we got to come on to your show. So we'll check it out.
I'd love that as well. Thank you guys so much for
All
having me. I
right,
really
yeah,
do
Jim, you
appreciate it
take
quite a
care.
bit.
We're gonna hang here and talk behind your back once you leave now. So
Please
we'll
do.
go.
That's the Chicago way as well. Yeah, bash the shit out of me as soon as I'm gone. Let's go.
Here we go.
See
All
you
right,
guys.
Jim, you be good. You be good. You be
Bye.
good. Take care. Take care. Dilly, do you know this is wild. I didn't realize we got this Chicago this whole Chicago connection. I had no idea where this was going. It
Yeah.
was awesome.
We got to go there,
No, for
George.
sure. And now I see Howard. Oh shit, Howard. Hey, Howard, you there?
Yeah, I'm here.
Sorry, I cut
Hey,
you off.
Howard.
Jim left before. I don't know. Jim, are you still there? I don't know if Jim still shows as a speaker, but Howard, you know the places he's talking about?
Yeah, actually, I grew up not far from Brant's, and the family business was not far from there, and all up and down what's Highway 45, which was outside Chicago, out in the county, in between villages. That was mob haunts all up and down there. There were mob places, and Brant's is, it's kind of I don't know if it's world famous, but we always thought so around there because of the history of the place. And I don't know if you guys do this date, I'm gonna have to
Yeah.
maybe give in and find my way to Chicago. But
Yes.
Iuorio
Yes.
has the very best White Sox and Comiskey jokes I've ever heard. And growing up at Wrigley, I thought I heard my share.
What
But
was the thing
growing
about
up at
you?
Wrigley
What
in the
was the thing about you?
'60s and '70s,
What's the thing
but Jim,
what did he say? Technically, you could see a good looking woman at Comiskey Park, but it's not likely. Or I can't remember what it was. It was like I gotta go listen to the replay. He was on fire.
yeah, and it looks like he's still in here. But Jim, if you happen to be listening, I also want to thank you because back when I was willing to watch CNBC, you taught me quite a bit about, got me really curious about trading the VIX, and that's kind of you got me into the disease.
Oi.
So, and a whole bunch of other things. It looks like he left, but
Yeah, so
I'll thank him back channel and whatever.
yeah,
But I
so
wanted to
he's
thank
yeah.
you, George,
No,
for
I
getting
appreciate.
him on because this was great.
No, it wasn't. It's funny. Again, Howard, I had no idea where this conversation was going. I mean, I know of him,
That
whatever.
was
I reached
great.
out to him, but oh my god, no, he,
Super
yeah,
cool
really good
guy.
guy, really good guy. So
Yeah. Really
I
easy to
I
talk
gotta
to.
check. We gotta check out his show too. So yeah.
Hmm.
So
I put it up in the nest, one of the clips from the show, so
wow, this
people
is
can
like a
find it
futures
there.
guy or something. I think he's with How to Trade the Coming Chaos. All right. I don't know. It's just like, ladies and gentlemen. I mean, just think about all the twists and turns we've had in this market over the last few years, and Right now the market's almost kind of monotonic. It just keeps kind of like edging up, edging up. It rotates. One day it's one crazy thing. I'd say it's another crazy thing, but it keeps going up for the most part. But something will come up. I don't know. And look, who knows? Maybe the market goes straight up here before it happens. But just like, one wouldn't have predicted the degree of the tariffs like this, or the deep seek thing, or the Israel bombing Iran, or just work backwards. All right. I mean, who's to say we're done with surprises? To the contrary, I think it's naive to think we're not done with surprises. Right now, though, there's a lot of complacency. It's living's been good, living's been easy, whatever. But I don't know. And David, if you're still there, but I look at that bond market, and equities don't care, and who knows when they're going to care? Maybe they'll care at a much higher number. I don't know. But it's hard to say. So I don't know. The music will change. It always does. Trying to predict exactly what it's gonna be. I really don't know. But David, are you concerned about bonds?
Yeah, I am structurally concerned about bonds. I think that they're going to be a larger signal for potential weakness, especially in equity markets. I think. By the way, this is something I've been discussing for the last 3 weeks. We've been in a quote unquote normalized IV, you can argue, but for 2025, it's actually been unprecedentedly low. We went back down. If you look at the SPX implied volatility in the options changes for clarity here, it was essentially back to 2024 levels in the lower bound, right, where we were in this like quote unquote
Right.
Goldilocks type situation. It was evident that positioning was going to increase implied volatility, where like on average during just for brevity's sake, right? 54%, and if not more, of option transactions are done in zero dated options. So it's really important to isolate intraday IV in relation to positioning. And then today we saw literally a 15% IV. This was at the money IV, jumped to 27% after the Jerome Powell Fugazi
Right.
news. And I call that Fugazi news because there's uncertainty that was created within the market. But at the end of the day, correct me if I'm wrong, and this is a genuine question: does Trump even have the physical mandate to fire Powell? Doesn't he have to wait on a legislative basis to until the term's over, right?
Yeah, I mean, David, I hear you. And by the way, I'm sorry, I'm triggered not by you, but it's just scanning something as you're talking. I totally agree with you, my friend. So, David, I'm sorry, I don't mean to have like ADD on you, but I'm gonna change the subject. Are you as annoyed or as triggered as I am by so much of the hyperbolic garbage, all right, that the Furus and the guys with the newsletters are using on X and elsewhere? Like, I just saw what's got me going right now, Dilly. I just saw something that comes by from, I am going to name names, from Trend Spider, which is one of the worst offenders. And the headline says, "No one saw this coming." All right. And I don't even know what they're talking about, but I guarantee you it's always after the fact. They didn't see it.
But it made you click on it,
Yeah, of
right?
course.
That's
Okay.
all it
Or
is.
or there's the
Clickbait.
odious, obnoxious, and if anyone knows it, have him come in right now. I'll say it to his face. JC Peretz, All Star Charts. Everybody's wrong. Yeah, including you, asshole. Okay. People write this stuff, and I'm like, who are they kidding? So, Dilly, you're right. It does trigger me. It does capture my attention. So, David, you're more mature and well balanced than I am. Do you tend to ignore these things?
Yeah, 100%. Clickbait, as Dilly was saying, is too prevailing within this world of, let's say, overstimulated news streams, and so they have to find themselves in a situation where it's like, if they're not harping on the impending doom or the impending, let's say, ripping opportunity that X equity has to offer, then they're not getting as many clicks, and so they have to be hyperbolic on both extremes, right? Negative and positive, which is unfortunate. But like you see that on YouTube, you see that with all these other forms of news streams, and even like Bloomberg starts doing it with these tacky headlines, where essentially you're like, okay, well, that's not really that's not what I inferred via your headline towards what the article is describing, right? It's just to get more eyes on it.
Well,
Go ahead.
yeah, David, it's funny you say it because remember we had Adam Taggart a few weeks ago. And Adam's a good guy, right? But someone called him out. I can't remember, it was Joe. Somebody confronted him, even though he's well adjusted. I use that term guardedly. Okay, even he's like the king of clickbait headlines, and it was like he didn't have a good answer when quite. It's the same thing that you're saying. I don't know, Dave. Were you in that space when we had Adam a
Yeah,
few weeks
yeah, I
ago?
was in that space. Yeah.
Yeah, and it's like I think if you don't do it, like no one's gonna read your thing. Like I remember, I'll name names now because it's mutual friends. We all like these guys. So Michael Kramer and I, one of our first YouTubes we did back in November, December, we had Tom Thornton on, and Tom's like, on the one hand, on the other hand, like he'd have a strong view. He's like, yeah, the market could go up, but it's gone up a lot. And I like Tom. He's a very smart guy. He's a good guy. He's a friend. But the net of it was, Tom did not have a strong market call at that point. So we tried to make the headline up until you're going to laugh. Okay. The first lame attempt at it was something like, you know, Tom Thornton, market outlook unchanged. It's like, who's going to read that? It's like, so you're forced to write something crazy. Like, is this the end of the world? Like we had, okay, you guys will remember this. We had Steve Eisman a few weeks ago. All right. And Steve Eisman of Big Short fame. Okay, so I was talking to Steve in advance of the space. I'm like, what do we use for the title? And so we came up with one. And by the way, Steve's bullish, all right, but he went along with the gag. The title of the space was "Is this 2008 all over again?" All right, unequivocally not. Okay, but David, it's like if you don't put stuff out there, no one's going to look.
Yeah, no, I get the same problem as I fully opened up. I have my own like Substack,
Sure.
and my headlines aren't grabbing. They're factual. I like to be empirically based. I like to have quantified metrics to justify the sentiment behind the thesis, and then by nature I have a fairly like we can call modest headline, but it doesn't grab attention, right?
Right. All right. So some jackass. This is our sponsor now. I have to read this out. Some jackass is sponsoring a conference. All right. It's on July 30th. All right. I mean, listen to this. Early bird expiring tonight. This was last night. Looking for cutting edge, actionable stock ideas? Sohn Conference. Move over. No fireside chats. Just best investments. No $2,000 ticket prices. $350 early bird is an incredible value for the exclusive paywall content not available in the public domain. Blah, 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 blah. All right. So that is my conference. And I have news to share with all of you. So basically, the first conference we did was pretty much macro heavy, all right, with all the smart macro guys, Michael Howell and Jordy Visser and so on and so forth. This is a stock ideas conference, okay? Because so one of my friends said to me when he watched the Mark Cahota's sketch, a stint, he was the only one recommending a stock, and it was like, oh my god, a guy actually recommending an individual idea, and it was fantastic. So we said, why don't we do an ideas conference? All right, so these are not my ideas; these are ideas of some of the leading investors out there. And wait, I have a special announcement to make. Seriously, I'm all kidding aside. I'm going to make this. I'm going to make you guys an offer you can't refuse. And seriously, when I talk about possibly quitting Twitter and FinTwit, like I'm dead serious. And here's why. So this conference, we're having 16 investors. It's $400. Think about if you just get one good idea. In any event, you can look at the list of names, but they're all either buy side guys talking their own book, so serving up their own cooking. They have a vested interest, or they're well-known sales research people, and you can decide whether you like them or not. But from Renaud Soler, who's ex-Fidelity, Soros, More Capital, friend of mine, Tom Chanos, brother of Jim Chanos, his research costs $30,000 a year. No, I exaggerated. It was $27,000 a year. Tom Thornton, who you all know, Adam Parker, former Morgan Stanley strategist, Gordon Johnson charges 20 grand a year for his research. He comes in these rooms, but you want the good stuff, you want the stuff that's behind the paywall. This is where you're going to come to get it. Robert Mullen, MRA Resource Advisors, guys at 40% first half of this year. Zach Marks used to work at CK Alpha with Steve Press, runs a hedge fund. Great guy. Ed Dorsey, Bear Cave, we had him on a couple months ago. We all know him. Ed's going to bring a name. I don't know what it is, but he told me it's a $3 billion short idea. Calvin Frosch, somewhat controversial, but always got interesting ideas. He's killed it, sometimes not so much, but really smart guy, great investor. Enrique Beta runs his own research firm now, has been outperforming the market for decades. Melody Wright, I'll keep going on and on. I want to mention them all. Anyway, here's the deal. Here's what I want to mention in addition to all this. So these guys are going to come. Just imagine you get one idea. You're probably going to get 25 ideas because it's going to be rapid fire. Each guy's going to come up with, each man or woman's going to come with one or two ideas. But on top of it, and this is what's new, the early bird expired last night. The response so far has been pretty decent for the conference. On top of it, most all of the presenters are going to be offering a free trial. So, for instance, I mean, the buy side guys obviously won't, they have research to sell. But Tom Thorne's going to give you a month free if you want it. Adam Parker, a month free. Gordon Johnson, I think 2 weeks free. Ed Dorsey, a month free. Enrique Abeta, a month free. Melody, a month free. Tom Chanos, his research is going for 27,000 a year. He's going to give you 25% off for a quarter if you want it. All right. Jay Mintzmeyer, also very expensive, but he's going to give you 25% off. Steve Kress. Anyway, the point of it is there are literally hundreds, not thousands of dollars of free trials and discounts available here. And this is all, Jesus Christ, it's not like a used car salesman, but it's true. I'm making you an offer you can't refuse. Like, if you're a serious investor and you don't buy this ticket, I'm actually going to cop an attitude here. The ideas themselves are worth a fortune, but get this research on top of it. And I know people are leaving, and I can see the size of spaces going down. But you know what? That's fine. That's why I'm going to leave X, because I'm sick of this nonsense. Like, why should I bring people like this on if no one's going to pay for it? And it's fine. I'll just read it myself. I don't need this aggravation. So I'll be updating the conference website tonight or tomorrow. It's July 30. There's never been a conference like this. If you're looking for ideas and not macro bullshit, all right, this is a conference you got to come to. So I can't say it more squarely and plainly. So there's that. Okay, so let's go back to the markets. So, David, I'm kind of like, I'm not, I had gold and gold stocks. I still have them. I know they haven't, they've been correcting in time, not price the last couple of months, but I'm not chasing this stuff that's going on fuego crazy to the upside. So I don't know, David, sectorally, stylistically, factor wise, are there any picks or pans, any things you really like or don't like in the market right now, David?
That's an interesting question. I'll be completely open book here. I play a fairly structured game. I really enjoy one of the trading strategies that I've been doing is finding high IV names. So I like to play options, obviously, and I like to take advantage of situations where we know we have an abnormal IV range, and you be sort of unidirectional in the sense that you structure a position, either a spread and or a variations of like a back ratio spread, but all of these variations are spreads by nature. And then you capture the either IV normalization, so that you then profit on it. Like, I know the ticker that shall not be named, the quote unquote Tesla.
Yes.
That it represented a unique opportunity July 3rd, actually, because that July 3rd contract jumped up to 98%. Average IV for Tesla is roughly around the 60 percentile range. So you
Right.
know that there's going to be a normalization. So if
Sure.
you're able to put yourself in a situation where you literally go in and you harvest that premium, because obviously premiums are increased when you are in a higher IV regime, you then harvest that premium because you're saying, I'm going to allow theta to come into play. I'm going to allow this IV normalization to come into play. And that's inherently going to make my position profitable. And this is X any technical analysis. Evidently, if you get direction correct at the same time, you're profiting even more. But these are positions that I like to play unidirectionally. So what I like to do, especially for given sectors, is I'll see names that have abnormally high IV, and then I'll play let's say a month out type spread that allows me to capture that harvest premium and essentially just then print that level of position. On a longer term, I will again be slightly open, but I won't name specific sectors and or equities. But I will say that finding yourself a momentum-based strategy where you have a closely related beta to the S&P, but that offers more growth rate within each given sector. You'll have a given 3 to 4 names that have the highest potentiality for growth rates, right? And then from there, you isolate which one's the most optimal one, and then you structure yourself a little momentum strategy that offers you 10 tickers across different sectors that then offer you this level of closely related beta. So if the S&P essentially does drop 1 to 2%, you essentially follow suit. But if the market essentially decides to rip, well, you have asymmetric returns in relation to that of market returns. Those are the 2 things that I'm observing right now.
And Dave, that sounds really interesting. Those strategies worked out pretty okay.
They're the premium harvesting. You have opportunities like UNH, a prime example again last month, and you play yourself a longer dated spread that allows you to capture it. And then you simply say, I'm not basing this off of fundamentals, unfortunately. I am basing it off fundamentals in the options chain. If you're looking at it, it helps if you have a fundamental thesis within the given company. You've actually done a DCF and you've actually have a formal thesis across an equity. But if you're looking at it just purely on a trade structure, these names usually offer you these like asymmetric returns, because what you're doing, and literally just looking at the structure, to reiterate it, but I think it's important to reiterate, when IV is high, implied volatility, premiums are higher because the option maker needs to be able to price that in. So you're taking a position that says, not only am I going to say I'm harvesting off of the decrease in IV, because the second IV lowers what you've just bought, right? Let's say you're buying a spread for $5 and IV drops by 40%. So it went from 98% right back down to the 60 percentile range, like the Tesla example. Well, you've just decreased the premiums, but what you've just done is played a credit spread that allowed you to already harvest it. And now when you're trying to buy back that position, you're already in profits. That's X theta. And then once you get theta, some more time decay to play in your favor, you're compounding the actual returns. Hence why I really like those positions, because structurally speaking, they offer you asymmetric returns. On average, after doing have a fairly high win rate as well on these types of structures, especially if you're playing them unidirectionally. Yeah.
So you have a pretty high win rate, but you're doing this pretty, like, I mean, these trades are weeks in duration, days, weeks in duration. I mean, you keep rotating the merchandise, so to speak. No.
100%. Yeah. So the Tesla trade was literally a week out. You bought the
all right. So
you bought the front week,
when you're doing UANH, so it's just to imply it's just to harvest the volatility. Basically, you're not expressing a view per se on the stock.
Exactly. Yeah, and that's it. To be more accurate, you're harvesting the premium, because that's what it is.
No,
Like
I get it. I get it. So Dilly,
George,
Dilly.
what?
There's some guy, blabbermouth,
Yeah.
Bellagio. Okay. UNH. Okay. I mean, it's like fucking number go up. Excuse me. All right. It's like not an ounce of research. Blah 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 blah. All right. Like, I got total time for what David says. Zero time for that ill-informed, cheerleading used car salesman nonsense. So, but I'm not going to name names, Dilly.
Got it.
Got it. Check.
No one knows who you're talking
No
about.
one knows except you. Nobody knows. All right. So Dilly, we've been going on this an hour and 20 minutes. What else? Are we gonna kind of close this
I
out?
gotta go to dinner, George.
Yeah, so do I. All right. So we don't have a space presently scheduled. Don't worry, there's gonna be more coming. And I urge you to all sign up for the conference. It's gonna be great. That's July 30. It's 2 weeks from today. And I got a couple good speakers lined up. I just haven't nailed the dates down for our next few spaces. So Jim's not here, but he was great. David, thank you. Howard, thank you. Dilly, this is really excellent. And see you guys soon. Take care. Good night.